Hello traders, welcome back to the channel. Let's delve into the financial markets, updating some charts with you. Now with the DXY bouncing again from this previous support level, I think it's important to track other Forex pairs, specifically the major, but not only. I have a list to share with you for today: the pound, the euro, the Aussie. We will also explore some of the patterns that we projected before for the euro versus the Aussie and the pound versus the Aussie. Also, we have gold and silver, crude oil, SPX 500, the German DAX, and Bitcoin. So stay tuned. Let's delve into some of these technical patterns and try to understand where the market goes next. So first of all, the DXY now reacting again from this previous support level. It's important to keep tracking this DXY while inside this range. We called your attention before to that possibility for a period of a consolidation, extended between this range. We have resistance at 101.83. Support remains at $100.51 for the DXY. So let's see how the market reacts with this bounce from today's session. We saw also some Forex pairs reacting out also to the structure, the price structure, the trend line resistance in this case for the cable that we called your attention at the beginning of the week. Once we approach this trend line resistance, the market may suffer some pressure and actually the cable being pushed lower again back to the intraday resistance broken at 131.58. So we are now back to the previous resistance level. Also the euro versus the dollar facing the same trend line resistance, or very much similar situation here, and suffering some pressure. We are also threatening the major resistance level 111.39. This is a resistance from December. So basically we are threatening that major resistance level for the euro dollar. We have also the Aussie facing the golden Fibonacci retracement level 67.45. We started the week breaking this channel resistance level and breaking above the daily fractal resistance. We should not ignore the possibility of a retest of these previous highs, as I called your attention before, but at this point, with the DXY starting to bounce and all the other Forex pairs starting to retrace again, I will not be surprised to see that the Aussie being pushed lower again. We have also the Aussie versus the New Zealand finally breaking above the daily fractal resistance 109.05. Another situation that we anticipated at some point for the pair, with a bearish scrap pattern projected at 109.77. So basically I will expect a move towards this cluster box between the 50% Fibonacci level and the golden Fibonacci extension level for the Aussie versus the New Zealand. Once that pattern completes, pay attention to the potential pullback. The Aussie, the Kiwi also facing structural resistance, as I called your attention at the beginning of the week. Once the price touches this trend line, we should pay attention to reactions, and actually the price is already being pushed lower to 61.83. It's the current price for the Kiwi, so pay attention for more downside also for the Kiwi. We have also the euro versus the Aussie now threatening support level 164.49. That's a neckline for the head and shoulders pattern formation, so a clear breakout of this structure support should trigger a move towards 163 and eventually a retest of these lows, and or eventually even more downside momentum for the pair. The same happening for the pound versus the Aussie, now fighting support level 194.88. That's a new fractal, the daily fractal support. In fact, a clear violation of this neckline should trigger that move towards the 200% Fibonacci extension level. I projected that Fibonacci level at 193.13 for the pound versus the Aussie. Wait for the breakout of support level. The gold market, and let's delve into the gold, silver and crude oil. So we are now talking on commodities. 2573, we have a new fractal resistance at 2586, and since the price achieves the default target for this cup and handle pattern, we should expect a retracement. After the formation of a new fractal, I call your attention to the potential pullback. We never know if the market will react to that Fibonacci extension level, but after the formation of a new fractal, and in fact we need to adjust this to the recent fractal resistance 2589, we saw gold starting to pull back.
Hi, my name is Blake Morrow, president and co-founder of Forex Analytix. If you're watching this video, that means you're in search of a trading coach, a personalized coach that can help you get to where you want to get in the markets. Whether you choose myself or one of our other well-qualified coaches, it's up to you. Every one of us comes from a different background, and every one of you looking for a coach comes with different needs. So make sure you go through, peruse all of our coaches, read their bios, watch their videos, see which coach is going to be best suited for you as an individual trader. And I'll see you in the coaching session.
The same happening for the silver market, and this is one of the patterns that I've been tracking carefully, and this is one of my trade setups for the week. Basically the short for an attempt to short the metal, in this case the silver. We have this trendline resistance, as we can see here, covering these previous structure highs, these fractal resistance levels. We saw an approach to this trendline resistance, but we have also what we may call an ascending channel and its structure resistance and trendline resistance also. So I will, I'm expecting a pullback for silver, not only because we have multiple elements of resistance, but as you can see, the market touches the 224% Fibonacci extension level, 3106. That's the completion point of a bearish crab pattern, and actually the bearish shark pattern, 224% Fibonacci extension level, and usually that pattern targets the 50% Fibonacci retracement. Crude, the bullish crab pattern at 67.24, we have a new fractal support, we mentioned this before, 65.65, default target for the pattern achieved at $71.27. So you can see those patterns printed before, and we anticipated this move. You can explore some of my previous videos discussing those patterns. SPX 500 now printing actually new higher highs. We have a new historical highs at 56.82 for the SPX 500, and we have also the bearish crab pattern completed a few points below. So after a retest of this monthly fractal resistance, should not ignore the potential retracement. The German DAX also facing intraday resistance. In fact, after breaking the resistance level, we are now back to the fractal level again. 18,722, that's the previous resistance level. Basically we are inside what we may call a range for the bearish shark patterns to complete for the German DAX. So I admit if the SPX 500 starts to pull back, I admit the possibility for the German DAX to follow the same momentum and eventually will also start to pull back. The Bitcoin edge and shoulders pattern triggered before, we discussed this pattern before. New support, actually the 38% Fibonacci level, as you can see here, 57.557, 38% Fibonacci acting as a level of support for Bitcoin. This is also the neckline for the edge and shoulders, or the inverted edge and shoulders. That pattern points to 62.843. Stay tuned, I will update some charts later. I hope to see you in the next video. Have a nice week.